Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. I kid you not, right when I was about ready to start, a fly went just right by there. Scared me. I saw this glaring thing. Hey, anyways, welcome to our FinTips series here. Very short. You can sort on our channel by FinTips if you want quick financial tips, usually relating to your retirement, your personal finances, or anything to get your dough straight. So I hope you'll check that out and hit the subscribe button and thumbs up and all the stuff that everybody's supposed to ask you to do. Hey, we went over for our customers a lot of election data there. We went over all kinds of different things to show how the markets perform around elections. And if you happen to watch the Closing Beat show, which we do live at 5 o'clock every single day, we covered a few different tips there. What I want to do is just kind of expand on some of the things that we shared with our customers here today and see if it's something that maybe you can learn from, and maybe next time there's an election, we don't panic as much, right? It'd be a good thing. All right, so let's take a look here. On the Closing Beat, we shared this here with you, how the week before the election plays out, and then how the Monday and Tuesday of election week play out. If you don't know, the stock market actually played out exactly as it does historically. The Monday and Tuesday gains for the S&P were 1.78% there, ranked as the 6th best. In other words, you got 1928, 1, 2, 3, 4, 5, and this one here would have been 6th. Very close to when Reagan took his second term in 1984, but not 1.78%. Nonetheless, ranks as the 6th best performance. However, the average performance is 1.06, median performance 0.54, positive Monday and Tuesday of election week 87% of the time, as you can see just by looking back at this here. So that was one thing we pointed out on the show. One thing that we did for customers was to say, I don't really care who you want to win. We all have to go vote, do our duty there, and we'll all be friends no matter who won. And, you know, we know it looks like Biden won, but it didn't matter, right? We want to know about your money here. So we want to know how the markets actually would perform going forward. So I shared this with customers in one of our Wine and Wealth classes. Wine and Wealth is a class we do every Thursday for customers, just to update you on things that are going on, teach you something new, things like that. So one of the things I pointed out was, hey, if you don't mind who wins, then you kind of hope that the incumbent keeps the position. It doesn't matter if they're Republican, Democrat, or if it's next election season or whatever, you kind of hope they just stay there. The stock market doesn't like change. So if the incumbent kept control, the average gain 11.9%, median 9.24 1 year after. Notice the blue here. I'm going to highlight this for a second. From the election to the end of the year. That's really where we're at right now. So we want to kind of focus on those numbers to see what the rest of the year has in store. Largely positive, 76.9% of the time the market was positive by an average of 5.7%, or let's just call it 5% was the median there if you're interested. Now in this case, looks like the incumbent did not win control, but I didn't know at the time. So what I did is I shared every data point. I said, okay, here's what happens if we change parties, which is kind of what's happening this time, right? So if we take a look here, from the election to the end of the year, the average return on the market's 4.87%. We're already outpacing that, so we have room for the markets to fall if they want to fall. Median was basically the same there. If you look out 6 months after, it's a little bit worse than if the incumbent keeps control. And a year later, the average is actually skewed by 1932. We went over that in the class. The median 1.32%. So it's not as great if the one party changes from the other. See back here, if the incumbent keeps control, stock market performs a lot better. Doesn't matter if there's an R or a D in front of it, it just performs better there. Now we looked at what if a Democrat loses to a Republican. That's not the case in this time, but it's actually a good thing because the average performance down 2% if we look out 1 year later. Nobody wants that. We want gains, right? We want to see some gains. So we looked a little bit further and we said, all right, what happens if a Republican loses to a Democrat? This is the case that we're in, right? It looks like that's the case that we're in, assuming everything stays as it is. So 1932, I already mentioned that. The average is skewed because of the Great Depression there. So we take that out. We look at the median here. 22% in 1960, little loss, little gain, little bigger loss there in 2008. The median gain when a Republican loses to a Democrat is actually pretty good. If we look out a year later, median 9.13% there, positive 3 of 5 times, obviously way positive 1 of the times there. So the odds are on our side that even though half the world apparently is heartbroken because Trump lost, half the world is really excited, the stock market doesn't care. It's looking forward and looking to what it can expect out of that new president, right? So there's a lot to consider there. Obviously, this is just looking back. Forward returns do not indicate what will happen based on previous results. But it's kind of nice to know that even in all those times, you know there was some drama. you know that maybe some weren't as dramatic as this one was or whatever, but you know there was drama, you know there was the market wiggling around, having a good time, everybody was emotional, and the stock market just went about its business, right? So in this case, because a Democrat seems to be taking over, it's not the end of the world, right? You may not like it, but it's not the end of the world. And now you know the data behind it. So we shared this with our customers about a month ago. We did the Wine and Wealth class along with all kinds of great classes. I really love sharing the details there in that sort of thing. We also shared it on our research site. So if you can't be a client of Jazz Wealth, you're not in the country, you just don't want to join us, you can join our research site, jazzwealth.com/research, where we share a lot of the research that we're just using to make our decisions because we manage our own portfolios there. And so I just like to share that stuff with you. It's $13 a month and helps us keep, we get to buy lights and stuff just to help make things a little nicer. But if you don't like any of that, that's okay. I hope you like this video. You'll hit the subscribe button. I'll keep doing more. It'll be great. Thumbs up me, do all that. If you disagree, that's cool too. Just be nice and have a great rest of your day.